Morning, Steve Free in Chicago with the morning grain comments. Prices are all a little bit lower overnight. I think the market is trying to relax a little bit, take a deep breath before Friday's USDA report. We're also watching the weather pretty closely. Right now the Midwest is drier and it's allowing corn planting to be done. The forecast is for rains to move in over the next, let's say 48 hours, and then another shot of rain early next week. For the most part, if you've got corn or something in the ground, that's a good thing. If you're in the northwest part of the Midwest and you haven't got planted yet, it's a bad thing. Also, the southwest part of the U.S. plains is missing out on these rains, and that makes almost Dust Bowl type conditions down there. So in general, the weather might be just a little supportive to the marketplace, but we got the report on Friday. I think there are, here in the United States, some people that think that there's enough soybean imports coming in to satisfy the old crop demand. And that's why we're seeing the July contract leaking lower and why we're losing some price premium in the July-November bean spread. The question is, once those beans get in and crushed, how will the meal get to the end users? So the game may not be over, but for right now it's taking a pause. Over in the corn, pick a number. Maybe as much as 2 million acres may not get planted this year in corn from the government's 92. Does that mean a higher yield? We'll find out on Friday when the USDA gives us our first 14-15 corn supply and demand. In the wheat market, some people guess that we have as much as $2 to $2.20 premium because of Ukraine and because of the U.S. weather. The question mark is that U.S. prices are now much above world prices, and are we losing export demand to offset our lower crop here? And what's going to happen in Ukraine? No one knows. So the wheat market continues to be choppy. One thing we do note is that there's been a lot of put buying in the wheat market on anticipation when the wheat market finally makes a top. We also saw a new flow of money coming into the grains yesterday. Some people link this to the new climate report. Some people link it to Ukraine, and others just link it to the fact that the other financial markets are wobbly. The market's waiting for PMI data from China, and we're also waiting for any new news from Ukraine. So maybe the grains might be a safe haven for some of this asset-linked money. Kind of surprising given the time of year and the uncertainty in the weather, and how high prices have already rallied from the first of the year. So we go into the report on Friday. We expect the government to lower the U.S. corn and soybean 2013-14 carryouts, and we expect them to show 14-15 U.S. and world carryouts higher than this year. Should be a little friendly to the corn and bean market, but could be a little bit negative if down the road if we achieve these new numbers. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.